Well, good evening, everybody. Welcome back to Strongman Personal Finance. A lot of the time, I don't really like to mess around with individual stocks, but there are times like this when you see an opportunity that is so glaring, so transparent, and so in your face, and the potential risk versus reward is so powerful that even an ardent boglehead like me has to take the opportunity to scoop up a significant amount of shares of a prime gold star American company that has recently gone through some trouble, but in the long run, I believe will be a 3x stock by 2027. That company is none other than Nike. So let's go ahead and pull up, and I'm going to show you my buy, and then we're going to go through my financial analysis. So when I saw Nike stock collapse under $70, I thought to myself, should I continue to save for quitting my job? Should I continue to put money into the Vanguard Total World Index? Or should I potentially take an opportunity? And because I had about $20,000 in my savings account, I decided that now was the time to strike, to buy Nike stock. I have purchased 300 shares of Nike stock for $20,488, and I have depleted my savings. However, I believe that in a very short time, I can turn my savings from $20,000 into $60,000. And when I do that, I'm going to be able to retire a lot faster and to be able to pursue my dreams. That's why I do this. I do this to show you how to achieve your dreams as quickly as possible, because you're not going to get that with an index fund. So let's go ahead and dive into why I'm super bullish on Nike stock. So as you can see, I was quickly going through the financial statements. Nike stock is an iconic brand, and it's a very dominant brand, both in the United States and internationally. Anywhere you freaking go, everybody recognizes Nike. There is something to brand power. Brand power is worth more than the assets and liabilities on a company's balance sheet. Brand power is powerful. Now, this iconic brand, which if you don't know what Nike is, you might be a little bit special. This iconic brand has suffered recently. This stock has absolutely crumbled. And a lot of people that are short-term performance chasers, they get upset because they love stocks that go up and they hate stocks that go down. But your biggest opportunities are to buy iconic brands when they go through temporary troubles. Buy a good business at a fair price. That is what Charlie Munger said, and that's what I'm going to do. So, over the past 5 years, the stock is up 7.31%, which is absolutely abysmal. So when you look at the stock chart, you say, this company is on the way down. This company is cooked. This company is finished. But you can also see back in 2021, the stock hit a high of 180. Okay? And you'd be delusional to believe that that stock could not get back to 180 because it's Nike. And it's got a great business that has saturated both the domestic market in the United States and internationally. Don't let the chart scare you. Now, this stock has had some troubles and it's down 28%. And you've seen some significant pullback in the company's profit margins and in the company's revenue growth. The reason that happened is because during the pandemic times, the world was flooded with money, especially in the United States. Everybody got a stimulus check, multiple stimulus checks, tax credits. Money rained from the sky. And Nike had a massive run up because people were buying all sorts of items that they had on their wish list. And that included Nike shoes and Nike apparel. However, the stimulus ended, the pandemic ended, the free checks ended. And Nike has since returned to a pretty fair value. As a matter of fact, pretty significant value. Why is that? Well, if you look at the long-term trend, Nike stock has done absolutely phenomenally. It just got a little bit ahead of its britches. It got a little bit ahead of its time. And now we're at a point in the business cycle where interest rates are high, consumers are feeling the pinch, and people are spending less on discretionary items. But when the economy gets too bad, do you know what the Federal Reserve is going to do? They're going to cut interest rates. People's expenses, interest is going to massively depreciate. Their total cost of financing is going to massively depreciate. And what do you think they're going to be able to do? Once they free up their mortgage, they refinance their mortgage, they refinance their car, they're going to have a lot more discretionary income. And this is right around the corner. Right around the corner. As soon as the economy really starts to struggle, the Federal Reserve will cut rates. Borrowing costs will go down. Consumers will have more discretionary income, and they will go back to Nike stock. You can clearly see that it just got a little bit ahead of its time during the pandemic. So let's go through some of the financials, okay? Market cap is $100 billion. This is not a tiny business with trailing revenue of $47 billion and net income of $4.5 billion. This is still a profitable company. Even during turbulent, difficult times, this company makes money. Earnings per share of 3, PE ratio of 22, and a forward PE of 38. Now, you may say, Strongman, that's pretty delusional that there's a forward PE of 38. Yeah, the market sees massive opportunity in this company. PE ratios are not a metric. They're a tool. Just because this company has a forward PE of 38 discounts the intrinsic value of this company and the intrinsic value of this company's brand. And we're going to go look at historical ratios before to show you, okay? So current PE 22, forward PE 38, and it's got a nice solid dividend of 2.37% yield, which is only going up as the stock goes down, okay? So let's go ahead and look at the financials. What are the concerns about Nike stock? Well, you can clearly see that revenue is basically stagnated since the pandemic. That's because a lot of revenue was pulled forward. So we had this temporary boost. But the long-term trend of Nike's growth has not been defeated. If we go and look at the sports market, okay, the American sportswear market, who dominates this market? It's Nike. Nike dominates this market. Nike has roughly 55% of the market. 55% of the market is controlled by Nike. Oh, it's going to zero. Oh my God. Okay. They have a huge dominant control of this market. Now, the CAGR for American sportswear is only about 4%. Okay. That's what they project growth to be for the market size from 2021 to 2026. That's just in America. That's actually discounting the potential growth internationally because this is a global brand. This is why you only should buy U.S. stocks because they have global diversification and currency diversification. That includes Nike. So if we go and look at Nike's financials, yeah, their revenue year over year has gone down, okay? Because we're getting back a lot of the growth that we pulled forward during the pandemic. Look at the revenue change in 2021. Look at the change in revenue growth. Massive spike because of the pandemic. Massive, insane spike. But guess what, people? Once it normalizes again, it's going to go back to the growth that it was on before. And you're going to see the long-term performance of this company just like you did in the past. So if we go look at profit margins, okay, what's going on with profit margins? Profit margins are starting to contract a little bit. Okay, we can see gross margin, the most recent report was 41%. Operating margin, 7%, pretty significant collapse. And then profit margin was 7%. So you can see that margins are starting to get tight, okay? What affects margins is revenue and expenses. That's it. So Nike just isn't generating as much revenue, but has a lot of fixed expenses. That's all that's happening here, okay? And the gross margin really hasn't contracted that significantly. It has to do with all sorts of inputs that are temporary. And once inflation gets cooled down and the Fed cuts rates, I guarantee you the gross margin will accelerate. Free cash flow margin. This is another issue. They've had pretty significant free cash flow margin, but recently it looks like the data is saying is that they did not have any free cash flow margin. Let's go check that out. So if we go to the statement of cash flows and look in the operating section, okay, we can see that the data is not populating. So either they had zero operating cash flow or the data hasn't been updated yet. I suspect the data has not been updated yet. Maybe Wall Street's trying to hide something from retail. I don't freaking know, but that hasn't been populated yet. Now let's look at historical ratios. Nike's PE ratio is as low as it's ever been in 5 years. 5 years. What does this tell you? The company is probably cheap. Let's look at the price to books. As low as it's been in 5 years. Price to operating cash flow. Let's look at the trailing 12 months. Price to operating cash flow. This is the cash flows before capital expenditures. basically bottomed out. Okay. You see the trend, it bottomed out after the pandemic, and now it's starting to recover. You're on the recovery end of this. Okay. Now, is Nike going to go bankrupt? Let's go look at their balance sheet. Let's go look at their most recent balance sheet. So they have $10 million of cash equivalents, and short-term investments. $10 billion. Their short-term debts are $11 billion. Okay. Now, on the surface, oh my God, that's so bad. But this is a positive cash flow business. Okay. They're going to be able to generate enough cash flow to cover their short-term debts. Now, if you look at their long-term assets, they have $7.3 billion of property, plant, and equipment. They haven't really added to it. And if you look at their long-term debt, it's only about $8 billion. So slightly underwater. But guess what? If a company is cash flow positive, it doesn't matter what happens to the company's profits. It doesn't matter if the revenue declines. It does not matter if the company faces massive competitive pressures. Companies always come back, especially iconic American names. And I would not be surprised if President Trump actually intervened. If this company really was about to go bankrupt, President Trump would not let this company go bankrupt. And guess what? You may think I'm full of crap. Do you know that back in 2008, the United States government bailed out a bunch of businesses? There's a certain level of business that if they experience financial troubles, the government is going to bail them out. The government is going to come in and make sure they stay afloat. And Nike has achieved that status. Imagine the shame to America if Nike, our iconic brand that controls 55% of our sports apparel market, went bankrupt. That would be an utter and complete disaster. We are not going to let that happen, and rates will be cut, and this company will be perfectly fine. Okay? So, that's kind of my thesis. What do you guys think? Do you think Nike's going to zero? It controls 55% of the America sportswear market. And if you look at the projected CAGR from now until 2030, it's actually 9%. So we're having a temporary slowdown in growth because the economy's a little bit rough. But in the long run, you're looking at 9% compounded annual growth. And you mean to tell me that Nike, which controls 55% of the sports apparel market, you mean to tell me when it's at historically low price to sales, price to operating cash flow, price to books, and it's an iconic American brand, you think this company is going to go to zero? I know you're scared because the stock went down, okay? Now's the time to buckle up, grab your noosing, and be a freaking man. Let's do some comments. All right. Please book a free 30-minute tax consultation with me. I am a certified public accountant. I will do your business and or personal taxes any state in the United States. You can talk to me for free. I give you upfront quotes, and I'll prepare your taxes like a boss. Are you saying Nike is more appealing than VT? I took all of my freedom fund, the cash reserves that I had, that I was going to use to finance my business next year, and I threw it into Nike. All of it. Okay, $20,000. Because I'm that confident that this company will rally and will 3X by 2027. Buy VT. Yeah, honestly, I'm getting tired of VT's piss poor performance. I'll be perfectly honest here. Okay. Let's see. Nike is trash. Yeah, but they only control 55% of the active sportswear market in the United States. Oh, it's trash. The stock went down. Don't buy it. This is the difference between long-term investing and short-term investing. Okay. And of course, it has a solid dividend, and it's impossible. There's no way that dividend could possibly be suspended. Okay. They're having temporary hardship. I've always shielded. What are you talking about? Who said I never shield individual stocks? I do that in almost every video. Tesla's another appealing stock. I might make a video on that. Let's see. Well, I actually respect Joseph Carlson. He's a good investor. Okay. Let's see. All right. Well, I appreciate you guys tuning in. Okay. We got financial. I'm trying to help you out, dude. I like the same stock that you do. Okay. Why are you being not nice to me, man? Do we have beef or something? Come on. All right, guys. I hope you enjoyed the analysis. I hope it was thorough because I spent a lot of time preparing this presentation. Please book a free 30-minute tax consultation with me. Let me do your 2024 taxes. You can talk to me for free. I give you upfront quotes, and I'll prepare your taxes like a boss. Cheers!